Today we're taking a look at the General Journal, and this is Chapter 6 for accounting. Now, what we've been doing so far is just preparing you with basic accounting actions and functions so that we can get to the journal. Because the journal is most closely resembling what you're going to see on a computer. Now, if we put you right onto a computer, you'd be very confused about debits and credits and things like that, and also how they work. So we've done the little steps that we have so far to get you to this point. Okay, so what's going to happen in a journal is that this resembles how things would be entered in a computer, and you would simply type in a debit and a credit, and you would know, because you've done chapters 3, 4, and 5, that these are accounts that need some action to be taken. Okay? The journal is just an accounting of things as they happen, moment by moment. An action occurs and it is journalized. It is put into the journal. And so this is just a record of how things are going in our business over time. Which is why in the journal you always have to have the date. Okay, so you could just put January up at the top first, and then each time there's a new date you put it in. If it's the same date, you just put second and just keep coming down, until third, keep coming down, fourth, Okay, so the journal is definitely entries by date, by when they happen. That's what you enter them. All right, what we're going to see here is that in every journal entry you will have three things. You will have a debit, you will have a credit, and you will have some sort of explanation or source document. All right? So you're always going to have three entries whenever you do something in the journal. Now, you could have 4 or 5 or 6. What if you have, 3 debits and 2 credits for the same entry and one source document? That could happen. We're not going to get that complicated. Mostly we're just going to have 2 entries, a debit, a credit, and a source document or explanation. Maybe the book will throw in one time where you have 2 debits and a credit and a source document, just to let you know we could do that. Okay? You'll notice the formatting actually matters here, so that the first entry is always a debit. Okay, so when you go to journalize these things, you have to have the debit indented, and then the credits indented, and then the source document. And that's a really good way to do this because it just visually breaks things up into this slanted pattern of how you're entering. Okay, so you can see this section is 1 journal entry, 2 journal entries, 3 you can see because of the indents. So you want to set those off like that: debit, credit, source document, explanation. Okay, and every time you do that, so cash and bank is our debit, capital is our credit, memorandum, number 1. All right, so that's something you want to take note of. If you flip the debits and credits, you get into all kinds of trouble when you're trying to record it. So you should have this very staggered pattern as you're going through your debits and credits. Now, what happens if you're looking for the debit and the credit, and you're like, well, I know the credit, so I'm going to write that down. Well, just indent it first and put it on the second line. And then when you find your debit, put it on the top line. But usually you want to approach things with a debit, credit, explanation. Okay? So that if things were happening in the office or in your business, and you were putting things into the journal, you would do this on a computer, and so it would say, entries, and you'd type in cash and bank, 10,000. And that's going to record as your debit, and then it'll say second entry, and you're going to put capital because the computer expects you to know the first one's a debit and the second entry is a credit. And so when you type in capital 10,000, it's going to automatically put those into the journal, and you'll have that entry, and it'll be for that day. And the great thing about this, the reason you do all this, is so you can refer back to it. The journal is a recording of everything that your business is doing. So the T accounts that we've been doing in chapter 4 and 5, those are sort of like rough drafts. Those are like worksheets, they call them. You do T charts just to sort of pencil things out, and then when you get it official, you put it in the journal. And that way you can go back and say, yeah, I did that on this day and I made that payment. Okay? And I'm going to look for that source document right here, because this happens to me all the time. Someone will say, oh, you didn't pay. And I go, oh, look at that. I did pay. Do you have this check or this receipt or invoice? And they go, oh, yeah, I guess I do. I said, so we're good, right? Yeah. Okay. So it's very helpful when you're recording these things to be able to access that information so that you don't get double billed, you don't get overcharged, you don't get ripped off. Also, this is a very good way of recording things for taxes. So you know, I spent some money on something. Hey, look, there's my rent expense for the month, and how much did I paid $500. I can write that off as an expense on my taxes because that's what that is. All right? So you can find these things pretty easily, and as you just kind of go down there looking for expenses to write off on your taxes, there it is, and you just keep going down through your journal and you can find all those things. Okay? So your journal is really your guiding location where all the action that happens during the entire year is put into that journal, and it's a running list of all the things your business does. Now, on the form, we've got something called post-reference. We're going to get to that a little later. For this chapter, we're just introducing things, and so it will just be hanging out there. You don't have to be concerned with it too much, but you'll start to see things fill in here in the next few chapters, like, oh, that post-reference is going to appear. For now, we just need to understand the date, the debit, the credit, and the source document. And when you put those in, you get your numbers correct over here in the debit side and the credit side. And so that's why you needed to have spent a lot of chapter 4 and 5 understanding debits and credits. Because if I'm going to put cash in the bank, cash goes up with a debit. See, I should have learned that in chapters 4 and 5. And so I know, there we go, it's my debit line. And if I want capital to go up, capital goes up with a credit, so I know to put it in the credit line. I've found my two locations for those things. So you might still have to refer to the back of your book where it says rules for debit and credit. Okay? You keep flipping back to the inside cover on the back of the book until you get those, completely down and memorized. So you can just say, hey, rent expense, well, that's a debit. They always go up with debits. And cash and bank, well, if this goes up with a debit, I'm paying with cash goes down with a credit. There it is. Okay? So when you get to that point where you can just know those things, that's what you're really doing here. And it makes the journal go really fast. Some of you who have not thoroughly got that committed to memory will find that you really do need to do that. Otherwise, the journal is a real slow slog. And so this chapter takes longer than some of the others, so we'll have to get right into it and get going. Okay? So any questions? I'll see you in class.